Good afternoon, good afternoon, good afternoon. I ran a little late. I do apologize. It's 1:02, so I'm usually on by now. Um, Actually, my clock is wrong. Market's not closed yet. Wow, my clock says 1 o'clock. It's 1 o'clock. What am I doing? It's 1 o'clock. Jeez. All right, I apologize, guys. Welcome, Lance. Welcome. Mr. Cornfield, welcome. Cornfield is back. So let me go do what I got to do. Let me get set. All right. So today is what? Today is September 1st, 2021. This is my Wall Street Wednesday. This is episode number 60. So I do appreciate you guys coming. Episode number 60, and again, September 1st. Now, with that said, also my disclaimer. I'm going to give you my opinion, my thoughts. I have some stocks that I particularly like. Several of them I already own or I'm currently trading. So I'm going to post those and talk about those a little bit too to give you guys some ideas. And a lot of these stocks are ideas that you guys asked me to take a look at. G2, how are you? All right, so let's see. Where do I want to start? My man Lance is here, and I know Lance and I always talk about the commodities market, so that's why I usually start. Let me start talking about commodities. Afternoon, Twin, how are you? Welcome, welcome, welcome. All right, so let's talk about a few things. One, commodities. There are several commodities that are basically just taken off and doing and trading extremely well. So I'm going to share them with you, get you guys' opinion. Natural gas. Natural gas is running. Both commercially, or I should say both fundamentally and technically, strong buy signal on natural gas. It basically, hold on, I'll pull up the chart as I talk to you because I actually was looking at this in some detail again this morning. Futures, natural gas. Come on, natural gas. All right, so on natural gas, yeah, this thing is running. This thing, it broke out last week, and it's been running ever since. We're at highs. It's trading extremely well. And what's interesting about this is there's a major net short position. So you have a natural gas which is running, price is getting squeezed up, and there's a pretty big short position in natural gas. So what I'm saying is you could see a short squeeze here in natural gas. I'm looking at the futures. I also was asked about gold. I had a couple of people asking about gold, so I pulled up a gold chart. I don't see anything interesting in gold in terms of trading. There are, bear with me a second, I'm putting that up. Okay. There are, if I remember correctly, and I'm pulling that up too, commercials on gold are short. I'm pulling up right now. Yeah, no, I'm sorry, take that back. Commercials on gold are actually, they're actually getting net long. Now, they're still, I shouldn't say net long, they're closing out their short position. The chart's all over the place. As I mentioned the other day, I'm not a fan of gold. I think there's a lot of things you can trade that if you want to hedge against inflation, there's other things you can trade. Gold is basically just how can I put this? Gold is a bigger fool trade. Gold does not produce any cash flow. Gold does not produce any income. So the only reason really to buy gold is you buy gold and just hold it and hope it goes up in value. So I wouldn't be a big buyer. So I'm not a big fan of gold right now. Let's see what else. What do I like? There's several things I like. Besides natural gas, the Australian dollar. The Australian dollar is running. The euro, the currency, running. Silver, talk about gold, silver's running. Cotton is a short. Sugar is a short. Let me say all this again. These are the only one that's not a recommendation is gold. So let me read my recommendations again, long and short. Natural gas, I'd go long. Australian dollar, I'd go long. The euro, I would go long. Silver, I would go long. Cotton, I would short. And sugar, I would short. I think I mentioned sugar. Sugar and silver. I would short silver. So, short sugar. Long silver, short sugar. I'll read them one more time. I just want to make sure everybody gets it. Long natural gas. long the Australian dollar, long the euro, short cotton, short soybeans, go long silver. And last week we talked about this, stay short the dollar, stay short the American dollar. We talked about that last week, and I looked at it again today, and there's no reason to cover. Also, last week I talked about going long the Australian dollar. If you did, stay long. It's trading really well. All right, so I got that down. What does it say? Mr. Cornfield is back. Took a break from the market. Okay, cool. G2's here. All right, guys, so let's talk about this. Cryptocurrencies. You know, as I start this thing, I always go through futures, then I go through the cryptocurrencies, and I get to the stocks. Cryptocurrencies, Bitcoin. It was in a period of consolidation. It's at the top of the old trading range. If it can break through this $50,000 trading range, it's going to be in the old trading range between $50,000 and $60,000. $60,000. The old high, I believe, is $64,000. So you'll be challenging that. So again, Bitcoin is trading extremely well. It's at the top of a trading range, old trading range, which means, and if it breaks through this 50,000, right where it's been hanging out, you'll be in a new trading range between $50,000 and $60,000. Again, the old high is 64. It is trading well. The one I really like the most, again, is Cardona ADA. Cardona ADA last week set a new high at $2.92. Right now, it's back in the trading range. It's doing some back and filling. It's in the trading range between $2.70 and $2.95. This thing is trading extremely well. I would expect it to take out that old high. And like I said, it's trading. Check out that old high and continue higher. So I do like it. Ethereum broke out yesterday. Now it's in the new, back in the old trading range between 3,600 and 4,200. The old high is 4,300. I expect this thing to actually stay in that trading range and even attack the old high. So again, it's trading extremely well. Dogecoin, or Dogecoin. Again, of the five cryptos I talk about, I do not like this one at all. It's trading in a trading range between 27 cents and 30 cents. The old high is up in the basically up in the 70s, so you basically got a lot of work to do. If it can break through that 30 cents, your upside is to 35. If it does not hold 27, the downside is to 24. Like I said, of all the cryptos we watch, this one is trading extremely poorly. I wouldn't touch it. It's just not participating. Let's see. The last one is Ripple. Ripple's trading right now between 109 and 129. If it gets through that 129, it should trade between 130 and 160. It's trading pretty well. But again, if you ask me which one to buy right now, I'd be a big buy in Cardona ADA. That's the one I would buy. All right. Lance, you know, it's funny. On crude, the commercials on crude oil, I looked at it. The commercials on crude oil are net long. I mean, they're playing for this thing to run. Let me see. I'm going to go look at the oil right now. You know, I have some personal issues with oil. All right. Yeah, you know, it's in the upward range. It's doing some consolidation back and filling. I would say right now you're right around support at $67. It should easily trade up to that $69, almost $70 a share, based upon where it's trading. My big thing with oil and gas is that it's a geopolitical animal, and you know, there's enough variables moving this thing around, let alone politics. The other thing too is I've had some great calls on oil where I made some really, really good calls on oil, but my timing was off. And so I called the moves, but I could never participate in the move. So I call a move, and by the time the move happened, my position would expire. So I am not and was not, I just don't trade oil futures. As I mentioned, sometimes there's certain things that I've traded in the past, and whatever reason I can't make money in them, even though they've actually worked and gone higher or lower what I was projecting. So I basically just backed off. The goal again is to make money, not to prove I'm right. But yeah, based on you being long, I think it's a good purchase up here. You had a nice little run and doing some backing and filling. I think you'll test that 70 again. It's tested it twice in the last month. So I think you'll test it again. All right, that's oil. All right. Any other questions on futures? I'm looking through. Hey, what's going on, Hank? Good to see you. Guess you guys know Hank has a baby boy who's cute as a button. Welcome, Hank. Good to see you. All right. Now, most of you come here to hear me talk about stocks, so let me dive into the stocks. A couple of stocks you guys gave me last week to look at. I've been watching. Some of them are trading extremely well. Now, first and foremost, I want to talk about Dick's. Dick's Sporting Goods. Symbols DKS. In fact, symbol is DKS. All right, now here's what's going on with Mr. Cornfield. I will get to your answer. Your question. As we talked about last week, Dick's reported earnings and the stock ran and ran. Since last week when we talked about it, the stock is at an all-time new high. Hit it today again. Basically, intraday, I think it hit as high as 146, 147. So we're at an all-time high. Now, the reason why I bring this up is that another sporting goods store, ASO. So let me type that in. Another sporting goods store, ASO. When I checked, now I've traded this stock before. Once again, the stock I traded went up a little bit, went down a little bit. I think I ended up getting stopped out, but I did not make money on it. I traded a couple of times, so I didn't get the return I was looking for. But the reason why I bring it up is ASO is Academy Sports. I'm putting up the chart now. Academy Sports and Outdoors. The stock is trading extremely well. I figured that Dick's Sporting Goods would be a push on it, and Dick's Sporting Goods did push it. ASO is at an all-time high. It said it again today. The reason why I think this is important also is ASO reports earnings. Earnings are scheduled to be reported on September 9th. They're looking for $1.44. Again, I've traded the stock. Didn't make money, basically. I like the way it's trading. But again, if you want to play earnings play, I think there might be some run in this, some juice in this. ASO again is the symbol. All right, on commodities, Mr. Cornfield, I'm only recommending you short 2 commodities. Actually, I'm not into gold. Like I said, I don't have a real opinion. So my recommendation to short is cotton and also short sugar. Those are my 2 shorts. Everything else I actually think is long. So and by the way, it's not necessarily inflationary. It's basically I'm looking at the fundamentals, which is the commitment to trade report, and I'm also looking at the actual technicals on the chart. And basically, this is what's happening. I use the commitment to trade report as the fundamentals. So that's what I see. Inflation will have an impact on the currency, which is the dollar. The dollar will definitely have an impact on the overall commodities market. As the dollar gets weaker, our commodities become cheaper, which means that you can buy them and prices will go up. So let me say that again. When the dollar gets weaker, commodity prices actually get cheaper to buy. All right, because the dollar is weaker. So especially for foreign investors. So if the dollar gets weaker, they can actually buy more commodities with their currency when they convert it to dollars. So it's actually bullish for the for the commodities market, especially with foreign investors. All right. All right. So now, also last week, and I don't know this company. I don't even know who recommended it. I'm just pulling up the symbol. I'm going to type it up in a minute. In fact, I'm not even going to do it. I'm not going to put it up. So let me just move on. All right. So I got what? I think I had told you guys a couple of weeks ago that that I was trading NASDAQ as a proxy for a bullish market. So again, when I got a buy signal in the market, I decided to buy NASDAQ, and I've been trading NASDAQ when I got buy signals in the market. Now NASDAQ, I believe, set a new high again today. And as I pull up the chart on NASDAQ broke out, let's see, that was last Thursday. It broke out through 129, and right now we're at an all-time high at 197. So again, I'm long NASDAQ. I own the stock. And as I mentioned to you guys earlier, and I always talk about this, I'm a firm believer in buy high, sell higher. I don't believe in this buy low. So if you want to get really technical, I'm a firm believer in adding to your position when a stock that you own sets a new high. So I've done that with NASDAQ. In fact, I did not do it. I've done it with NASDAQ before, so let me back up. I'm about to add to it again. I'm looking at the chart now. I'm about to add to NASDAQ again. I like the stock up here. I like the market up here. I think there's a ton of cash floating around. I think that the cash is not in the marketplace yet. I don't think that anything is overpurchased. I do think that there's some cyclical, which means that money's moving from one segment of the market to the other. But by no means do I think that this is a chance to, by no means do I think the market's overbought and headed for a downturn. I think there's too much cash. And what's interesting is it's been a very bullish summer. The other thing too is, as you guys know, there's been a short in commodities. There's been a short in everything, which is also pushing up prices. So I'm bullish. I just can't say another way. So again, that's NASDAQ. I'm long. I own NASDAQ. So I don't want to be accused of front running like the Reddit boys. I actually own NASDAQ. I've owned the stock. We've talked about it. Another stock I own that is trading extremely well. Now I'm going to mention this stock. I own it, but I'm also going to put a caveat on it. And the reason why I'm putting a caveat on it is that, hold on a second. Symbols GLB, global E online. The reason why I mention is the stock set another new high today. If it didn't set it, it went right to it. Its stock right now, it closed at $81.69. The old high is right there off at 84. The reason why I like the stock, I like the way it's been trading. It is volatile, so it can easily pull off and come back to the mid 70s tomorrow. But the reason why I'm more nervous about the stock is that it has very light volume. It's a NASDAQ stock that trades 200,000 shares a day, 300,000. So a stock that trades 200,000 or 300,000 shares a day means it actually is trading, it's actually trading half that. NASDAQ does what we call double count. So NASDAQ counts a buy as a trade and counts a sell as a trade. So if I sold you some global right now, New York Stock Exchange would count that as one transaction, meaning you traded stock. NASDAQ counts it as two trades. The buyer is one trade, the seller is one trade. So these are very thinly traded stocks. So that's the reason why I like Globe. I think you make money in it. I told you guys I was long. I've been long for a couple, I've been long twice and I've been long for a while. But I do think that you need to be careful. Now, with that same thought and that same conversation, I do not own this one, but it's fallen under the same boat. And let me explain what I mean by that. I'm pulling up the symbol right now. And that's Monday, MNDY. Stock is trading extremely well. All right. Again, it broke out about a month ago. We talked about it, and it's been nothing but running. It's done some backing and filling. And then today, it actually challenged and went through the old high. Now, the reason why I get nervous with this particular stock, I'm not long. I take that back. I am long. I just purchased some, so I am long. But the reason why it makes me, and by the way, I took a smaller than normal position. And the reason being the average daily volume on this stock is 265,000. It's a NASDAQ stock, which means they double count. So this stock's trading on average about 180,000 shares a day. And as I always tell you guys, any stock that trades 180,000 shares, something like that, trust me on this, we can manipulate that stock. We can move it. So my big fear with these stocks, with Monday and with Globe, is that they're so thinly traded that we could actually get caught in there, get caught in the stock and not be able to get out because it's so thinly traded. Now, again, that's the reason why I took a much smaller position than I normally take. Really, I mean, I took a tenth of my normal entry position, and my normal entry position is anywhere from 10 to 25% of what my full position might look like. So in other words, I'm in there. I like the way it's been trading. I'm in there. And if it does keep trading well, maybe I'll add to it and get up to a decent sized small position. But right now, if the stock doubled, it wouldn't make a difference in my portfolio. But I'm long and I keep an eye on it. Again, the volume is what really bothers me. Now, this stock, hold on a second. Somebody's asking about Affirm. Affirm had that offer, right? I can't remember who's trying to buy Affirm. Can't remember. So that's why you got that big gap. I would, me personally, I don't trade stocks once they receive a takeover offer. Don't trade them. Now, you got two things going on. If a stock, I believe Affirm got a takeover. I can't remember who it's from, but that's okay. You guys know more than I do. Here's the deal with Affirm, and this is for everybody. On takeover stocks, if you own a stock that gets a bid, I'm making up numbers now. Let's say you own a stock and it gets a bid at $100 a share. Nice, easy, round number. Once that bid's on the market, if that stock is trading at a discount greater than 10%, so let's say the stock's trading at $70 a share, $80 a share. What that tells you is Wall Street does not believe it's a legitimate offer. They don't think it's an offer. They think it's weak. They don't take it seriously. If the stock's trading within 10% of the takeover offer price, so if they offer to take it over at 100, stock's trading anywhere between 90 and 100, that means Wall Street thinks it's probably going to happen. It's a good shot at happening. Now, don't get me wrong, there's still risk there. And the reason why I say it's risk is, let's say the stock's trading at 90. I'm going to buy a stock that I know is going to have an offer at 100, which means that's probably the most I can sell it for. And if the offer gets canceled or something falls through, it's falling back down to where it came from. I think there's more risk to the downside than the $10 upside in my example. Now, if they got a $100 offer and the stock is trading at 105, 110, 111, higher, Wall Street then is saying to you, we expect another bid higher than the one you just got. Wall Street's looking for somebody else to come in, maybe even a bidding war start. So using that information might help you in terms of trading, not IPOs, in terms of trading takeover stocks. But be careful with them, because the deal is, as you know, deals can get canceled. And if deals get canceled, and if there's no bidding war going on, that stock is going below, back to where it was trading and probably below that. And the reason being is all those investors are going to come out of the stock real fast. They're in it for the takeover. I'll get to Amazon in a minute. I will get to Amazon in a minute, I promise. If I don't, retype it and remind me, because it kind of falls into some of the stocks I'm going to talk about. Now, so I like Globe. I like Monday. Another one that I'm looking at that I like, don't own this one. So I'm showing you ones I've been watching, but for whatever reason, I don't own them yet. Sometimes it's because I actually missed the run. In fact, when I told you originally about Monday, when it broke out, I told you I missed it, and I was going to wait for some backing and filling. The next one is DLO, D Local Limited. The stock broke out today. DLO broke out today. Let me say it again. Hey, what's going on, Antoinette? How are you? Good to see you. DLO broke out today. All right, real good. Stock was in a trading range between 62 and 68, 69. It broke out today and went as high as 73. All right, stock's trading extremely well. I would take a look at it. Again, it's closed back in that trading range. So if you decide to take it, if it breaks below 60, close out your position. Use a stop loss at 60. I would expect, again, if you buy it somewhere around where it is now, 68, $60 is a little more than a 10%, $6 or $8 to the downside. Below $60 is about a 12 or 13% stop loss, which is not bad. But that's what I would do with DLO. I like the stock. I think it's trading well. Again, I missed the breakout, but I'm still on it. And it broke out off of earnings. And the day it broke out, volume was, I don't know. Hold on a second, I'll tell you exactly. When it did break out off that number, volume was 4 times average daily volume. So that was a legit breakout. And then it went back and consolidated. Now it's trying to challenge it. For those who like this, stock trades on average about 2 million shares a day. I think it's a good trade on the next breakout. DLO. What else? PWSC. Power School. Went public back in, let's see, July. What's interesting is it opened up and traded 18. Price talk was between 18 and 20. They priced at the low end, 18. But this thing has done nothing but creep up. It's trading extremely well. Pull up the chart. Oh, I always do that. Let me give you the symbol. Because, sometimes I get to talking fast, and you guys like, Professor, we missed that symbol. All right, so that's the one I'm talking about. It went to a new high, when was it, yesterday? Doing some backing and filling right in here, $34, $35 a share. I think for those who, again, I think this one's a nice one. I think you might get some run in this. Hold on a second, I'm just looking at something. Yeah, I think you can get some run in this stock. So the symbol again is PWSC, Power School Holdings, went public back in August, and at 18, and you already had a double. So if you brought it on the if you brought it once it started trading, and on the first breakout through 1920, you're close to a double. So it's been trading extremely well. All right. Oh, here's the other one. Now this one went public, did some back and fill and consolidation. It's cloud-based. I looked at it. It seemed to be trading well. It's another IPO that came public in August, but came public, and the stock is basically almost a double since it's gone public. I'm liking the way it's trading. I keep an eye on it. It didn't pull back today at the challenging that old high at 52. So again, you guys know how I am. A breakout through 52, especially on volume, would be a good time to buy it. Let me type in the symbol. So that's it. Cloud-based, symbols based. Now, the next two stocks I talk about, I'm putting a smile on my face. This stock broke out last week. I should say broke out last Friday. It's at an all-time high. I own the stock. I've been owning it. I haven't been trading it, but I own it, and it's trading extremely well. Another stock I'm going to look to add to my position. Believe it or not, I'm putting a symbol up. You're probably wondering, why won't he say anything? It's Apple. Apple's trading extremely well. It's just trading extremely well. And in fact, my comment to you guys is, going forward, Apple is down a little bit. Nasdaq's at a new high, Apple's down, but the bottom line is Nasdaq's not going anywhere without Apple, and Apple's not going anywhere without Nasdaq. So with that said, if you're still bullish the market, you're still bullish the economy, you're still bullish, and you think the market's going higher, Apple's not a bad play. It's breaking out, it's trading extremely well. Again, I own it. I brought some long term. I'm probably going to just pinch off a little bit and add to my position, which I always do. The other one, I'm putting in the symbol now. I looked at this thing and my mouth dropped. This stock is basically, it's pushed to an all-time high since May. It's been trading up since May. It did some backing and filling. In fact, when I show you this chart, when you look at this chart on your own, you're going to see a lot of what I call runs, consolidation, which is backing and filling, then another run, then a consolidation, and another run. So since July, the stock, let's see, it ran in July, consolidated, then ran again at the end of July, and then consolidated for July, consolidated, and then beginning of August, it ran again, consolidated, then it ran again August 19th, and now it's consolidating. And each time, by the way, each time it runs, it sets a new high. So this stock right now is in the trading range between 298 and 305. I'm pounding the table on it. I'm going to buy some. I really am. I'm going to buy some when the breakout through the old high. I already have it set up in my system. As soon as it goes to the old high, I'm going to buy some. I'm putting the symbol in right now, and boom, you're going to laugh when I show it to you. Microsoft. I'm pounding the table. Microsoft is a buy. Again, Milligan's philosophy, buy high, sell higher. I want the best of the breed. I want the best of the trading. I want the companies that are making moves. I want the companies that are making a difference in the marketplace. Microsoft right now is doing that. So again, I know I've never recommended Microsoft or Apple anybody. I told you my experience with trading Apple in the past as well as Microsoft, but I like both of them. Now brings me back to Mr. Cornfield when you asked me about Amazon. So now I'm going to look at Amazon. First and foremost, like you guys know I always do, I'm switching to a weekly chart. I'm switching to a weekly chart, and I'm going to go back several weeks. All right, so here's what's going on with Amazon. Amazon was in a trading range between 3,060 through 3,400. It broke out and tested 3,800, and now it's back right at the top of resistance at 3,400 and change. So you need to see it break through this 3,400 to challenge the old high. My point, and let me switch this to a daily. Bear with me one second, Mr. Cornfield. If your name was Dennis, I'd ask you if you were related to my old middle school basketball coach. But and he's in New York. So if you have some relatives in New York that are school teachers, that could have been my coach. All right. So here's the deal. I'm not a fan of Amazon. Nope. I think as a trader, you might, like now, you're at the top of a trading range. It's been up to this 3,500, 4 times in the last, since May. All right, so it's been up there 4 times, and each time it actually went through, and then it basically fell right back down and got it to this. In fact, today's guys took us to the top of that trading range. If we can get through this 3,500, you'll be able to test that 3,600, maybe the old high. But you got a lot of work here. I think the company's great. I think the company's going higher. I guess the best thing I would say to you as a trader, this is going to be a really volatile ride. I mean, I'm looking at one day where it closed at 3,600 and opened up the next day off of earnings and opened up at 3,350, and then went down to 3,200. Now it's back up. So you got a lot of stuff going on here. I think there's other things that you can trade that look a lot better. Costco was one of these stocks that always had a great chart. It was like, like watching paint dry. It's slow and steady, but it just keeps creeping up. So for my person who's asking about Costco, the good thing about Costco right now is, I'm just zooming in. Costco went to an all-time high on August 20th at 456. It backed off there, and now it's right there. Whoever gave this to me, if you own the stock, do not sell it. If you own it, do not sell it. If you don't own it, you're looking at buying it, Costco's a stock that you can buy. Don't expect Costco to give you this huge run in a short period of time. Be patient with it. But again, when you look at the chart, you'll see it. It's just a great performing stock. Always has been. Great company. It's just a more mature, slow-moving company. I'm writing it down in my notes too. All right. So I'll take a look at that again. But yeah, I don't think you go wrong buying Costco. It's one of those stocks right now that I would say to you, I would even buy it here before the breakout. I think you're really, really in good position. It's a long-term hold. Stay with it. I don't know what your cost basis is, but if your cost basis is down here in the 300s or even lower, definitely stay with it. If anything, I'm not sure what your cost basis is, and I'm not sure if you want to tell everybody what your cost basis is, but depending on what your cost basis is and how many shares you own, this might be a great time to add to your position. I always say this. It's not my saying, but I always say this. I hate to admit it this way. It's the old alcoholic saying, and that is, one drink's too many, and then 1,000 is not enough. Well, if you own one share of Costco, you don't own enough. You never own enough of a stock that's going higher. You always own too much of a stock going lower. All right, Costco's going higher. It's been going higher. If you guys don't believe me, I'm switching to a monthly chart. Pull up a monthly chart on Costco. I don't think anyone on this call would be crying about their returns and their performance if they had brought Costco anywhere in the last 5 years and just held it. All right. So I really like the stock. I think you'll do well with it. I think it's a nice hold here. All right, figs. Haven't looked at figs in a while. It's on my watch list. Haven't looked at it in a while. So let's see. So first and foremost, figs went public back in May. The old high. Let me give you the old high. The old high is what, $50.40. So you're not too far from there. Now let me switch it to a daily chart and see what's going on here. All right. FIGS is running. It's been running for the last 4 days. It bounced off a support at $36 a share. It bounced off its support at $36 a share. Took out the traded right to near-term resistance, which is right around 44. If it moves through this 44, you'll be in the old trading range between 44 and the old high of 50. All right. You're in a tough spot here. If you buy it here, it easily could fall back to $36 and still be in the trading range and still be trading well. If it pushes through the resistance right here where it's at, where it closes at 44, and pushes through and goes to that old trading range, it could take you a couple of days to get through it. Then the other thing too is if it does get through this and work its way to the old high, you could be looking at a double top. So because it's an IPO 1, and also I'm looking at the volume, it's got decent volume on average. What I would do is, I hate to say it this way for you, maybe you don't want to, but I'd be patient with the stock. If you don't own it yet and you're looking to buy it, I'd be patient and I'd buy it through a move to the old high. I really would. If you brought the stock on the run from 36, you got 8 points in it, probably on margin, which means you got 16 points on margin. Not a bad trade. You might want to pull a little money off the table, but again, it's just right now. It's just in that tough place. It's right at that place where it's not at the top. It's not in the top trading range. It just went to the top of an old trading range. But if it breaks that, it's going to be in a new trading range that's been in before, between 44 and the old high like 50. And it's just got some work in it. Now these IPO stocks like this, they can get through. They can work through these things in 2 or 3 days. So just be careful, be patient. I think again, I'd be a buyer through 50. And if the stock breaks below 36, your next stop is about 28 to 30. So if you break 36, your next stop is $28 to $30 a share. All right, let's see what else. Anything else? Checking my time, hour 40, so I'm good there. Long hold. Somebody's asking me about PLTR. I mentioned to you last week, I own this. I know, I break my own rules. So hold on, let me go back to a monthly chart. Actually, let me go to a weekly chart. I break my own rules. I own the stock. I own it. All right. It's a small position. I broke my own rule. I held a stock that I had a profit in and it broke support. But what happened was I didn't have a big position in it, so I said, I'll let it go. So I just let it go. I really did. Looking at the chart right now, at $26 and change, you're right at the top of resistance, near-term resistance. If you can get through this $27 number, let me switch this to another one. If you can get through this $27 number, PLTR. If you can get through this $27, if you can get through this $27 number, hold on a second, I need a little more information here. If you can get through this $27 number, hold on a second, because there's a lot of stock in here I need to see. If you can get through this $27 number, you got some more resistance up there at 28. So that $27 number, between $27 and $28 is a lot of work. If you can get through there, you're gonna hit that next resistance. You're gonna have resistance at $30 a share. Stock's got a lot of work in it. I know your girl Woods has been buying it. I know I'm still long the stock. I know she's at its position. I know that there's also that they just announced some major contract, I think. But right now the stock's just got a ton of work. It's all over the place. And I know Kathy Woods is at that position, but you're gonna need some institutional sponsorship to push this thing. And the stock trades on average. I mean, it trades what, 40,000 million shares a day? Let's see. Trades on average 52 million shares a day. So in order to move this thing now, you're going to need some major institutional sponsorship. You're going to need institutions that actually start buying the stock, which is what they did when it went public. Most likely, you're going to see this thing move off of news announcements and earnings because of the sheer size. All right, let's see what else. Lululemon. plug. Mr. Cornfield, I'm gonna go to my former student Henry, who asked me to look at plug because this is his first request. Henry, is this plug power? Ooh. All right, plug power. I'm looking at a daily chart. I didn't even have to look at a monthly or weekly, so you know I don't like this. Plug power was trading between $64 and $76 a share back in the beginning of 2021. Since then, in March, it broke down and got as low as $20 a share. It tried to fight its way back. It hit that major resistance at 35, 36, and it backed off of there and came back down to a trading range. You have support at 24. You've got resistance at 28 near term. If you get through that resistance at 28, you'll be in the old trading range between 28 and looks like 36. Stock's got a lot of work in it. A lot of work. I'm not sure what's going to drive this thing. But as I always tell you guys, the path of least resistance on this is to the downside, not the upside. So I'm not saying the company's going out of business. I don't know enough about the company. But to the upside, this stock's got so much ahead of it, so much on it, to even get back to that 76 number. And again, the old trading range is not much gain to be here. So in other words, if you buy it right now at 26, you got support at 24, and you got resistance at 30. So you buy it at 26, 27, you're looking to make 3 or 4 points before you start getting into some more headwinds. Unless there's some reason why you won't buy this thing long term, I would not be playing plug. Maybe there's a special situation, maybe there's a takeover acquisition, but in terms of just pure valuation of the business and the way it's trading, I wouldn't touch it. Lululemon, LULU. Great product, really solid product. All right. I'm pretty sure, I'm just double checking. Bear with me a second. Yep, pretty sure. There it is. All right, stock's trading at all-time high. No question about it. You've got, believe it or not, your major support is $300 a share, right around there. You got major resistance right where you're at $395. Now these are major support resistance. I'm looking at a monthly chart. Now I'm going to swing it back down to a daily and see what's going on near term with Lululemon. Not bad. Near term. Support's at 392, near term. You've got some minor resistance at 407, and you've got more resistance at the old high around 415, 420. So, I know it came off a little bit over the last couple of days. The thing I would say, whoever put this up on Lululemon, you got earnings due out. Let me see when they're due out. You got earnings due out. It says here they're due out August 31st. So I'm not sure. I'm just looking at. So my information might not be too accurate here. But earnings would due out any day now. And with earnings due out any day, they're looking for $1.18. If you already own the stock, I'd hold it. If you're looking to trade the stock ahead of earnings, I mean, that's your earnings call. If you're patient and earnings come out, it should and earnings do well. I mean, retail's been doing well. Lululemon's been doing really well. It's one of Wall Street's favorites. I would expect it to take out the old high once it digests the earnings. So I would expect it to take out that old high around 419, 420. Yeah, I really would. If it does not hold support, like I said, 390, 380, 390. If it breaks through 390, your next stop is going to be 378, 380, somewhere around there. Lululemon. All right, what's this? ETN. Not familiar with that symbol. Oh, Eaton Corp. Portfolio managers, money markets, mutual funds. Eaton Vance. I'm just switching to a monthly, see if we're at our all-time high. I think we are. Yeah, stock's been around for a while. I remember buying Eaton Vance mutual funds for clients when I was a rookie broker. I won't even tell you how long ago that was. So Eaton Vance has been around for a while. They really had a good family of funds. I haven't looked at them in a long, long time. Goes to show you, I was early on in my career when I was with buying and selling mutual funds. Wasn't too long after that I got introduced to individual stocks and never looked back at mutual funds. Eaton Vance, the same story. There was resistance at around $168, 169. The stock was in a trading range between 170 and 168, 169, and it just broke that, and it's back down in the old trading range. I'm not sure what's going on. It looks like earnings were really good. So if you're long this, I would say to you that there's probably some back end filling off the runoff of earnings because it had a nice move. And if you own it, I would probably stay with it. If you're looking to buy it, I'm a very patient investor. I would wait for it to push to that old high, and then I would attack it. So just be patient because it's doing some back end filling now, and you're actually back in a secondary trading range. So you want to see it hold this trading range, go back to the old trading range, and then take out that high. But based on what I'm seeing, I would expect it to do all that. It looks like it's going to do that. All right, let me see. East the Beast, what's going on, nephew? Always good to see you, man. I see my nephew's on here. He's a high school senior down in Miami, and I'll be going down to Miami for his graduation. I can't wait to see my boy graduate. All right, on to college too. And he's going to put a lot of money in his pocket. East is a very smart young man, and he knows how to actually make some money, so that's my boy. Lance, are you asking me to look at Home Depot, or are you just saying HD for some other reason? And this is going to be my last read. Reason being is as some of you guys know, I have to go to the doctor for physical therapy. I had some surgery done on my legs. We old jocks, we don't die, we just fall apart. So Lance, was that Home Depot you wanted me to look at? Typing it up. Put it in the... So Lance, looking at, I think you asked, yeah, okay. Stock is at its all-time high, or was. It's trading extremely well. Let me pull this, get a little more information. All right, you got the same story. Retailer, 329 was support right around there, and it was there earlier this month in August, and then it just broke down. Now it's in a trading range between 318 and 330. If you can break through this, which I think it will, looking at the way it's trading, it'll be back in the old trading range between 330 and 340. And at that point, you'll attack the old high. So now, back in August when they attacked the old high, it didn't get there. So you're looking at what we would call a double top. So you want to see it get through this 340. You want to see it push through there. I would be patient with it. Like if you own it already, stay with it. If you're looking to buy it, I would just be patient with it and just wait. Off of the hurricane news and construction rebuild. Yeah, I made a lot of money off of some of these home builders. Back with Katrina and the rest of them was at 10, 20 years ago. I made a bunch of money off of those. So not a bad play, but they were smaller regional. They weren't the big national chain like Home Depot. It was a smaller regional supplier, and I cannot remember the name of it, but they were based in the Southeast. That's where they're at. And of course, the hurricane hit down in the Southeast, and the stock just took off and exploded. I made some good money on that. So I like the idea. The thing I would say to you is the one thing you got to be careful with those. Home Depot's a national company, and so what happens in New Orleans might not be big enough to move the whole company in a significant way. Like I said, the company I was looking at was a smaller regional company. I don't even know if they're still in business. And again, to show you how long ago this was, this was at least 20 years ago. So I'm not sure which hurricane it was, but it was 20 years ago, and I'm not even sure if the company's still around. All right, guys, that was my last one. I'm going to wrap it up. I got to get out of here and go to physical therapy. I appreciate you guys stopping by. During the week, let me know how things are going. Lance is dropping me a GWW as I try and head out the door. Granger. Wow, I haven't looked at Granger, and I haven't looked at this stock in years. I pulled up a monthly real quick. Lance, I just want to see. So we're at the all-time high. All right. The only thing I'm going to say with this kind of company is with Granger, it's a material company. And the thing I don't like about these is that they're really cyclical, and when they're out of favor, they just don't move. So just be careful with Granger. And you can see that there's a lot of volatility in this chart. Yeah. A lot of volatility in here. So I would just be careful. I think there's other things that, not trying to be funny, not trying to tell you what stocks to buy and what not to buy. Yeah, GWW's, no, I wasn't referring to Granger. It was a smaller regional company. I'm telling you that and it was on NASDAQ. I'm telling you that they might even be out of business right now. Like, what's the other one? Tractor, TR, Tractor Supply, TSCO. Take a look at that one. Much better chart. I just pulled it up. They're a supply company. Yeah, take a look at this chart. It's a much better looking chart, Lance. If in other words, take a look and see if it fits your criteria, what you're looking to do. But yeah, this chart looks a lot better. So that's some big swings in it, but looks a lot better. And you got a cup and handle forming. You got a cup forming right now, and these are forming handle. And I know that you know your technical analysis. Cup and a handle is really, really bullish. This thing's formed a nice cup. Typically, a cup and handle also, when you look at it, could also be reverse head and shoulders. But yeah, it's got a nice cup and handle to it. Actually, nice cup and it's forming a handle. I'm writing this one in my book, Lance. Thank you. TSCO. Let me type it in real quick and then I got to hop, Lance. Again, Tractor Supply is what I just was talking about. TSCO. Tractor Supply. All right, guys, I got to hop. Got to jump in the car and go get myself strong. I won't be dunking on anybody anytime soon, like I've done it anytime recently. But at least I'll be able to walk the dog and hang out. All right, have a great one. And during the week, if you have any questions, hit me up. I'm back in class, but hit me up. And I will see you next Tuesday. Have a blessed one. Professor Milligan out.